As Rivian gears up for its Q2 earnings report, there's a huge positive sentiment among its investors. Does this make Rivian stock a buy? Keep watching as we go through analyst expectations for the earnings report, as well as recent news and a lot more. But before we do that, subscribe to our channel, $1 World, for regular Rivian stock updates. Rivian Automotive Inc., or RIVN, is scheduled to announce its second quarter 2023 results on August 8th after the market closes. Analysts predict that the company will report a loss per share of $1.41 and revenues of $978.88 million for the quarter. Over the past 7 days, the consensus estimate for RIVN's loss per share in the second quarter has narrowed down by 2 cents. The projected bottom line figures indicate a significant increase of 25.4% compared to the same period last year. Additionally, the Zacks consensus estimate for quarterly revenue suggests an impressive year-over-year growth of 168.92%. Looking at the company's recent performance, RIVN managed to beat earnings estimates in 3 out of the last 4 quarters, with an average positive surprise of 6.08%. This highlights its potential to outperform market expectations. In the first quarter of 2023, Rivian Automotive delivered better than expected results with an adjusted loss per share of $1.25, surpassing the consensus estimate of a loss of $1.51. Moreover, their bottom line showed improvement compared to the previous year, narrowing down from a loss of $1.43 per share. Despite missing the consensus estimate for total revenues, which came in at $661 million instead of the expected $696 million, Rivian showed remarkable progress compared to the same period in 2022, when they generated only $95 million in revenues. Looking ahead to the current quarter, our reliable model predicts that RIVN will likely exceed earnings expectations. This prediction is based on a positive earnings ESP, or earnings surprise prediction, which stands at positive 0.75%. The most accurate estimate for the loss is 1 cent narrower than the Zacks consensus estimate, supporting the likelihood of an earnings beat. In conclusion, Rivian Automotive's first quarter performance exceeded expectations despite missing revenue estimates. Moving forward, the company's positive earnings ESP suggests the potential for another earnings beat in the upcoming quarter. In the second quarter of 2023, Rivian exhibited strong growth in both production and deliveries. The company produced 13,992 vehicles at its manufacturing facility in Normal, Illinois during the 3-month period, which is a significant increase compared to the 4,401 vehicles produced in the same quarter of 2022. Likewise, the number of vehicles delivered also rose substantially, with 12,640 vehicles delivered in Q2 2023, compared to 4,467 vehicles delivered in Q2 2022. This surge in deliveries is expected to have positively impacted the company's revenues for the quarter under review. Rivian also demonstrated improved cost efficiency in the first quarter of 2023. Research and development expenses decreased to $496 million, down from $547 million in the same period last year, while selling, general, and administrative SG&A expenses reduced to $402 million from the previous level of $530 million. These reductions contributed to the company's narrower loss from operations, which amounted to $1,433 million in Q1 2023, compared to a loss of $1,579 million in Q1 2022. Moreover, the net loss for the first quarter of 2023 was $1,349 million, showing improvement from the net loss of $1,593 million for the same period in the previous year. Overall, Rivian's efforts to increase cost efficiency and the substantial growth in production and deliveries are expected to have positively impacted the company's performance in the second quarter of 2023. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's look at how the Rivian stock is performing on the market. As of August 1st, 2023, Rivian stock is trading at $27.30, with a day's high of $27.64 and a day's low of $26.35. The 52-week high for the stock was $40.86, recorded on September 15th, 2022, while the 52-week low was $11.68, reported on April 26, 2023. The opening price for the day was $27.19, and it closed at $27.30. The trading volume for the day was significant, reaching 46.71 million shares, and the company's market capitalization stands at $25.97 billion. However, Rivian stock has been facing challenges recently, experiencing a downward trend over the past few months and currently down by over 60% year to date. This decline can be attributed to various factors, including the broader sell-off in growth stocks and concerns surrounding the company's production ramp-up and the ongoing chip shortage. These factors have weighed heavily on investor sentiment and impacted the stock's performance on the market. Despite these challenges, the company continues to work on addressing these issues and remains a significant player in the electric vehicle industry. Starting the new month on a negative note, Rivian's shares are experiencing a downturn today, down by 1.23%. Despite showing some positive movement yesterday, the electric pickup manufacturer's stock is now under pressure due to two significant factors. Firstly, an analyst downgrade has likely affected investor sentiment, leading to selling pressure. Secondly, Ford has reported higher demand for its own electric pickup, which might be seen as a potential competitive threat to Rivian. As of 12:10 p.m. Eastern Time on Tuesday, Rivian's shares are down by 3.3%, though there seems to be a slight recovery from the earlier loss of 4.7%. These developments are being closely watched by investors, and the market remains cautious about Rivian's performance amid the ongoing challenges in the electric vehicle industry. Andres Shepard, an analyst at Cantor Fitzgerald, has become less optimistic about Rivian's prospects and has downgraded the stock from overweight to neutral. This decision was influenced by several factors, including concerns about the stock's valuation and the increasing competition from Tesla and its popular Cybertruck. Shepard noted that Tesla's Cybertruck has amassed over 1.2 million reservations, which poses a challenge to Rivian's market share. During Tesla's second quarter conference call, when asked about the Cybertruck's demand, Elon Musk expressed confidence, stating that the demand is exceptionally high and far exceeding expectations. Additionally, the sell-off in Rivian stock is further fueled by Ford's announcement that it has resumed production of the F-150 Lightning. The temporary suspension of production allowed the company to upgrade the factory, and Ford anticipates reaching an annual production capacity of 150,000 units for the electric pickup soon. Rivian investors are also expressing concerns about the growing market interest in Ford's electric pickup truck. Ford's recent price cuts for the F-150 Lightning have resulted in a significant surge in web traffic and orders, which indicates a strong appetite for Ford's electric vehicle offering. As a result of these developments, investor sentiment towards Rivian has become more cautious, leading to the downward pressure on the stock's value. The company is now facing increased competition and the challenge of maintaining its position in the electric pickup truck market. While Tesla and Ford pose strong competition for Rivian, the recent news of Ford's price cuts to the F-150 Lightning sparking consumer interest has understandably worried Rivian shareholders. However, it may be premature to dismiss Rivian as an attractive EV stock solely based on today's developments. The electric vehicle market is expansive, leaving ample room for multiple players to thrive, including Rivian. The company has already demonstrated its appeal to potential customers, and its electric pickup trucks have received positive attention and reviews. While competition is fierce, Rivian's focus on innovation, sustainability, and commitment to producing high-quality vehicles can continue to attract drivers looking for a premium electric pickup truck. As the industry evolves, there will likely be various opportunities for Rivian to grow and maintain its allure to potential customers. The prevailing sentiment towards Rivian stock is predominantly bullish, with the majority of investors and analysts expressing optimism about its future prospects. Many believe that the company's innovative electric vehicles, impressive production figures, and growing market share make it a promising investment. However, it is worth noting that there is a small faction of individuals who hold a more cautious outlook and believe there might be potential for the stock to decline. Despite this minority view, the overall sentiment remains positive, reflecting the widespread confidence in Rivian's position as a leading player in the electric vehicle industry. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.